Hi there, this is FXGOATS, your Forex mentor, and in this lesson, we'll be focusing on the introduction to fundamental trading. Now, without any waste of time, let's get started. Firstly, let's start with the definition of fundamental trading. Fundamental trading is when a trader focuses on economic events to determine which currency pair to buy and when to buy it. It is a way of analyzing potential moves of a currency through the strength and weakness of that country. What I mean by this is the fundamental trader uses economic events, which is also the macroeconomic indicators. They are specifically the news events which affect the market by creating high volatility movements. Now, the degree of that volatility will depend on the importance of that event, which is why you need to understand the importance of the specific news events and what they actually represent. I actually said here, it is a way of analyzing potential moves of the currency through the strength and weakness of the country. So let me give an example of what I mean here. Let's say, for instance, we have the US news, which represents the United States of America. What we need to know first is that the US usually has the biggest impact on the market because the US is the biggest economy in the world. So what happens, let's say, for instance, the US gains strength. Let me show you here. Let's say the USA gains strength based on the news affected in the market. Firstly, let's say we have two types of currency pairs. Firstly, we have the USD XXX, and then the next pair we have here is XXX USD. So what happens is when the US is actually a base currency of a currency pair, we're looking for what is so-called bullish movement when the economy gains strength. And then here when the USA is actually a code currency, and then the economy gains strength, that means you're looking for the so-called which is vice versa if the economy actually loses strength. That's what I meant when I said the potential movements of the currency through the strength and the weakness of the country. Okay, so let's continue. Trading on fundamentals is more of a short-term trading, unlike technical trading. A scalper trader. What I mean by this is a technical scalper trader is a day trader, of which they can trade up to a whole day trading. As to where a fundamental trader can only trade up to 10 to 15 minutes a day, or depending on how many news they have on that day. Hence, I said it's a short-term trading, unlike technical trader. The fundamental trader use only 15-30 minutes to only analyze the charts and enter pairs. So that is all for the introduction of fundamental trading. Now let's go to the next slide. Okay. News events we are likely to trade. The news events we are likely to trade occur on the macroeconomic indicator, meaning the overall view of the economy. Firstly, on the news events we're likely to trade, we have what is so-called the USD news. The USD news, firstly, we have what is so-called the NFP. The NFP stands for the non-farm payrolls. The non-farm payrolls focus mainly on the employment change of the USA, meaning how many people are employed and how many people are unemployed. So we are able to identify like how many people actually contribute to the USA economy. They're very important and they usually have high volatility movements. Now, when do we find the NFP news? The NFP news, we usually find them on each month in the first week on a Friday. Okay. Now, secondly, we have the CPI and retail sales. The CPI and retail sales, the focus for both of them is mainly based on consumers, meaning for the CPI, we're focusing on the price of the consumer goods and services, meaning are they able to buy and is the economy able to make profits? And then on the retail side, we're focusing on the consumption spending of the consumers. For instance, like are they able to spend? Is there circulation flow of money in the US economy? As you can see, guys, they're very, very important as well to economy, and henceforth you must trade them too. Now, lastly, we have the FOMC. The FOMC stands for Federal Open Market Committee. Now, they have very, very high impact and they're very important to USA. They usually have even high volatility than the NFP and also CPI and retail sales because the Federal Committees focuses mainly on the interest rates and the money supply of the economy, like the overall growth of the economy. Hence, they have the biggest impact when it comes to the forex market. They don't care as much as the NFP and these two right here. So when they do okay, make sure that you trade them as they can double accounts or even blow if you don't know what you're doing. Now, that's all for the USD news. So the pairs that I normally trade in the USD news is usually first the USD JPY, the USD CHF, and then that's when the USA is actually a base currency. Now let's say USA is a code currency. I usually trade on the GBP USD and then Euro USD. So those are the pairs that are actually most affected by creating high volatility movements when there's news for USD. Okay, so that's all for the USD news, guys. Secondly, let's go to the Australian news, which is the OD news. Now, on the OD news, firstly, we have the employment change, which is similar to the USD news, meaning when there is employment change, we're focusing on how many people are working and how many people are unemployed, because we want to identify like how many people actually contribute to the economy of Australia. So secondly, we have the CPI and the retail sales, which is also focused on the consumer spendings, which is important too. Then lastly, we have the GDP here. The GDP stands for gross domestic product, also important to the Australian news because it represents all the goods and services produced within a year and how whether that affect the economy. Meaning, if the GDP is better than last year, that means the economy is doing well, meaning we produced more goods than last year. If the GDP is lesser, that means the economy is doing bad, meaning the economy is less competitive to itself or other countries. Now, let's speak of the pairs of Australian news. So, the pairs that I usually trade on Australian news, firstly, when OD is a base currency, I usually focus on OD Japan and OD USD. And now let's say OD is a code currency, I'll focus on what is so-called Euro OD only. So, those are the pairs that I only trade when you have OD news because they tend to have high volatility movements. Now, that's all for the OD news. Now let's go to NZD news. Firstly, before we start with NZD news, I want to tell you guys that the NZD news doesn't occur as much as the OD and the USD news. So when they do occur, make sure that you do trade them. And then under the NZD news, we have the employment change and the CPI. I did explain about the employment change and the CPI. We focus on the unemployment rates and the employment rates of the economy. And here we focus on the consumer spending and the prices we have for the economy. So these are very, very important indicators for the New Zealand news. So okay, the pairs that we trade for NZD news is we're focusing on NZD USD and then NZD JPY. Now let's say now is the code currency. We were focusing on Euro NZD. That's only the pairs that have high volatility movements when there's NZD news. Okay, now that's all for the left hand side, guys. Let's focus on our right hand side. Now on our right hand side, firstly we have what is so-called CAD news, Canadian news, which is from Canada. Before we continue, I want to tell you guys that there's a link between the USD and the Canada news. So every time there's NFP, on the NFP day, there'll always be Canadian news as well at the same time. So the pair that joins these two is actually USD CAD. You see USD CAD, this is a very, very powerful pair, guys, because it contains one of the two biggest economies. Okay, secondly, we have the employment change that did go through from this last three. Focus on employment rates and the GBP. We're focusing on the goods produced. And then lastly, we have the BOC rate decision. What the BOC stands for, it stands for the Bank of Canada rate decision. Now, the Bank of Canada now is important to the CAD because they focus on the central banks of Canada, meaning they focus on the interest rates, they focus on the investment plans, they focus on overall growth of the economy, meaning the circular flow of money. So they're very, very important to the economy of the CAD news. And then they also create what is so-called high volatility movements. Now, lastly, on our right hand side, we have GBP news. On GBP news, these are news from England, so which is a very, very big country too. So firstly, we have BOC rate decision. What BOC stands for? It stands for Bank of England rate decision. Similarly to the CAD news, BOC focuses on the interest rates, the central banks of England. These are very important news to the GBP economy. And then I do advise you to actually trade them all, okay? Or when they do, okay? So now, the pairs that I trade with the GBP, firstly, let's say now GBP is a base currency. I'll be trading on GBP USD or GBP Japan. Now let's say now GBP is a base currency, Euro GBP. That pair is very volatile, doesn't normally follow setups. Now let's continue. Now, all these events updates, you can find them on investing.com app. If you're using an Android, you can find them on Google Play. And if you're using an iPhone, you can find them on Apple Store. Now, let's say, for instance, now you're using a laptop, you can find them on my Facebook website. Now, I want to show you guys how to actually set up your investing.com app on how to only have high impact news. So without any waste of time, guys, let me show you what I'm talking about. Right here, I have a clip of showing you guys how to set up your investing.com app to only have high impact news. Now, in order to have high impact news in investing.com app, you need to make sure you have only 3 bulls. So 3 bulls in this investing.com app represents high impact news. Let me click on the video. As you can see right here, we enter the investing.com app, we go to calendar, Then go to the icon up there, and then we can see we have different types of bulls. You must make sure you only have 3 bulls, which represents the high impact news. So this is how you set up your investing.com app to only have high impact news that create high volatility movements in forex trading. Okay, now let's go to when you're using my FX book. Now, for instance, let's say you're using my FX book. It's a website. You must type in the website myfxbook.com. So now let's say you do type the fxbook.com. It might take you into home, but make sure now you must go into economy calendar and you will be here. Now, once you're here, guys, you also need to have only high impact news. As you can see right here, we have different types of impacts. We have the non-impact, the medium impact, and the low impact. To make sure that you clean your news to only have high impact, you come into this more option right here. And when you get this more option, you must remove the medium, the low, and the no impact at all to only have what is so-called high impact news. Now you scroll down and save. And as you save, you only see there's only now what is so-called high impact news. As you can see here, now we have what a cleaner view of your news impact, and then you're able to trade your news easily, and you can plan your trades being a fundamental trader. So let's go back to our PDF. Now let's go to the next slide. On this slide here, we have types of fundamental trading styles. Firstly, you must understand which style you need to use in order to profit when news occur. Firstly, we have pending orders. A pending order is an order that is activated or filled when the price buy hits the price where you set it on. E.g., we have limits, buy or sell limits, and stop orders, buy or sell stop. Now, in pending order strategy or fundamentals, we only focus on stop orders, the buy or sell stop. Now, I want to show you guys how you can use pending orders in order to profit in terms of being a fundamental trader. Now, the stop order is for those who actually don't want to estimate the direction of the market, so they're trying to keep it safe. Now, let's say, for instance, the market is ranging in this manner. Okay, it's in a downtrend, and then we're looking for bullish movement, but you're not sure whether it's going to occur or not, so you want to remain safe. So what you do is you first set your buy stop right here, and then you set your sell stop right here. After setting your sell stop and buy stop, you make sure that you also set your take profit for the buy stop and the take profit for your sell stop. So now let's say the market is right here. We're waiting for the news events to occur. Let's say they're occurring at 2:30. They'll actually activate your stop order and now hit your TP in order to trade. Now let's say the news didn't actually go for a bullish movement. It went for a bearish movement. It'll activate your sell stop order and then how hit your TP. Now, the only problem with this strategy is that you don't get to actually profit from the volatility of the movement. As you can see, you only catch the small spike. This is the safe part of catching the fundamental news, but as you can see like here, it will provide you with less profits. Now, the market execution focuses on M and W patterns. Firstly, let's start with the M. The M is created on a bearish reversal pattern, meaning the M pattern is not complete until the price breaks out of the M or support. Firstly, what you need to know about the M is there are 3 types of M's. Let me show you what I mean. There is what is so-called an increasing M right here. And then we have a normal M. And then lastly, we have a decreasing M. What we have here is a high and a higher high. And here we have a high and a high. And lastly, we have a high and a higher low. So both this increasing and the decreasing M are very powerful than this normal M right here. So these are 3 types of M's that actually occur in the market. And M is not confirmed until it actually breaks the support level of the market. So let's say, for instance, our M will be like this. And then when news occur, that's when it will actually be complete, breaking your support level right here. That's what I meant by that, okay? So now let's continue going to the W setup. Now, the W is created on a bullish reversal pattern, meaning the W pattern is not complete until it breaks out of the W or the resistance. Similarly to the M, we have 3 types of Ws. We have the increasing W, we have the normal W, and lastly we have the decreasing W. What do you have here? We have a low and a lower high. We have a low here, and here we have a low and a lower low. I prefer using the market executions because you get to actually profit on the whole movement of the volatility of the spike of the market. Now I want to show you guys how to actually identify all these patterns in an actual market. Now let's go to our charts. As you can see, I'm only using the 15 and 30 minutes charts to analyze my news. So in order to identify when the spikes occurred, you must look where the market slowed down and then actually had what we so-called biggest volatility movements. So as you can see right here, firstly, I've already spotted two types of Ws. I have what is so-called an increase in W right here for myself. Before the news occurred, the W actually went down first, and then secondly created a spike up. A strong movement, as you can see right here, guys. It broke our what we so-call our resistance right here, hence confirmed to become our W setup. So this is very powerful. As you can see, you're able to catch on the whole spike of that volatility. Now, secondly, here we have also the second increasing W as well. You can see it also slowed down before the news, as you can see right here, and then also created what we so call a big spike. The reason I'm saying it's better to have the market execution is because you can see you get to actually profit on the whole movement of the market. Now let's go to the next pair we have to find or spot different types of market setups. Okay, now this time we have the gold pair, which is the XAU USD. What I see M setups. Firstly, as you can see right here, we have our declining or decreasing M. See, so it broke through my resistance. As you can see, the market slowed down here and then now it entered the pair. What this did is also it retested after going down and also continued with the spike, creating an overall down big movement right here. As you can see, guys, this is how you actually spot your M and Ws in the actual market. And secondly, here we have the M here, the increasing M. As you can see, guys, here before actually news occurred, the market actually slows down, and then as you can see right here, then secondly creates a bearish strong movement. So it's very important for you guys to understand how to use this market execution and how to actually identify into the market. I want you guys to actually practice this skill over and over again. It will become as easy as it is for me for you too. Let's check on other charts if maybe there are also M's and W's to spot. So let's continue. On this third pair here, which is the USD Japan, I see a W. It's hard to spot because it's not proper. I want you to know that it's not always that your W's and M's are going to be proper. As you can see right here, this is my W. As you can see here, the market slowed down before creating a small spike. I did tell you that a straight W doesn't normally have the same strength as the increasing or the decreasing W's. As you can see right here, you can only catch this whole spike, and then this is how a W was created. Okay, now let's go to our next pair. Let's see if you can spot any W's or M's in this pair here. Okay, in this pair here, I've spotted my W. I'm pretty sure you can see it too. We have my W setup right here. This is very hard to spot as well, but as you can see, I see this because I can see that the market actually slowed down right here and then created what is so-called a strong bullish movement. Okay, so guys, that's all for me. Do this over and over again, practice, and it will become easier with time. FXGOATS signing out.